Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. We're in the Bahamas, meeting with some of the smartest people we know, talking about things like real estate, gold, silver, agriculture, and the future. And today we'll sit down with an amazing gentleman that hasn't been on our show for more than a dozen years. Can't wait to reintroduce him to you today on the Real Estate Guys radio program. All aboard! Registration is open for the Real Estate Guys 22nd Annual Investor Summit. Imagine spending more than a week with like-minded investors, world-class educators, and real-world professionals. Returning in 2024 is the editor of the Gold newsletter, Brian London, real estate developer Beth Clifford, and the rebel capitalist George Gammon. Back with us in 2024, sales legend and best-selling author Tom Hopkins. And joining us live and in person for his 12th Investor Summit, Ken McElroy. Plus 2 brand new faculty members we can't even mention yet, and a lot more. It all begins June 13th in Fort Lauderdale, Florida. Visit investorsummitatc.com to get all the details and reserve your spot. This transformational week is like no conference you've ever attended. Go to investorsummitatc.com and make plans to spend a week with the Real Estate Guys, Ken McElroy, Tom Hopkins, and an all-star faculty on the 22nd Annual Investor Summit at Sea. Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms, and joining us, financial strategist co-host Russell Gregg.
Hey, Robert.
We are in Nassau in the Bahamas.
We are.
Beautiful. The birds are chirping. The wind is blowing. And we have a chance today to sit down with a gentleman that blew our mind several years back. We were at a big event, and we had our Real Estate Guys booth right next to the gold-silver booth where Mr. Michael Maloney was holding court, and it was mesmerizing.
Yeah, just how we're here, like what are you doing in the Bahamas?
Yeah.
It's something we've talked a few times about on the show up to this point, but we've gotten a chance to connect with George Gammon, who's a huge macro thinker. If you're not following George, you can check him out at georgegammon.com, and he puts out all of these educational whiteboard videos. And now when I have confusion about what's going on with the Fed and the repo markets, and he really, really understands the plumbing underneath the macro banking system. So he understands a lot of things, but that's really his specialty. Kenny McElroy, of course, is a legendary multifamily investor and syndicator, been a Rich Dad advisor for a long time. Robert and Kim Kiyosaki been investing with Kenny for ages. Jason Hartman, probably been podcasting about as long as we have.
Yeah, almost.
Yeah, we were all there together at the beginning, a big single-family home guy. Anyway, the three of them had gotten together and formed a mastermind group called Collective. And we have had for a long time over at the Real Estate Guys an Inner Circle program, really based on us spending one-on-one time with syndicators. It's very small. We never talk about it on the show because it's really not scalable. But they came to us and said, hey, guys, you want to get together and put your programs together? And so we're down here in the Bahamas, and this is our first kind of combined group, and we had Mike Maloney come in, and we're just taking advantage of the opportunity to spend time with Mike today, because as you know, in 2008, we watched the great financial crisis unravel a lot of people who had what I call fake equity on their balance sheet, real estate equity. And it's true in the stock market as well. And I talk about that from time to time, and I think I've been pretty open about the fact that I got hit pretty hard by that.
Yeah.
And what I noticed at that time as I was looking around trying to get outside of the real estate echo chamber, that gold had kind of an inverse correlation. Real estate prices were dropping and gold was going up. Now, correlation isn't causation, but it was a clue. And it was like, okay, I got to go investigate that. I got to figure out what is this gold thing all about. Mike Maloney is one of the guys that has been one of the most prolific, consistent educators in the area of precious metals. And we first got a chance to meet him actually at an event that Robert Kiyosaki put together specifically to do a deep dive on gold. And that opened up a whole world of study. So we're really excited to bring Mike to you today. He's got a new book he's going to be talking about. His presentation was amazing. And he's doing some other things outside of gold and silver that are interesting too.
Can't wait. When we come back, you'll meet our friend Mike Maloney today on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
With everything going on in the world, don't let your lack of financial understanding derail your investments. Real estate investors need to see the bigger economic picture. The Federal Reserve, bonds and interest rates, precious metals, oil and gas, cryptocurrency, and the inner workings of monetary policy, just to start. If you're at all confused about how and why market metrics intersect and what it means to you as a real estate investor, take your understanding to a new level with the Future of Money and Wealth video collection. Discover the opportunity to hedge against inflation, deflation, and stagflation. Gain critical insights on real estate niches that perform well in challenging times, and learn specific strategies to fortify your balance sheet before it's too late. Simply send an email to future@realestateguysradio.com for all the details. The Future of Money and Wealth includes 20 videos of powerful presentations and panel discussions featuring Robert Kiyosaki, Peter Schiff, G. Edward Griffin, Dr. Doug Duncan, Simon Black, CPA Tom Wheelwright, Brian London, Dr. Chris Martinson, and many more. Email future@realestateguysradio.com today.
Hi, this is Simon Black from sovereignman.com, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, heard on this station every weekend and all the time at realestateguysradio.com and all your favorite podcast outlets. It was many, many years ago when we first had this guest on the program, and he's been long overdue to come back. Let's say hi to Mike Maloney. Hey, Mike.
How are you doing? I think it was 2009 or 2008 that you had me on your show.
I think it was way back.
Yeah, it was way back.
And a lot has been going on since then. People think of you as the gold and silver guy because, well, you founded goldsilver.com and you've written a couple books on that. But really, you're more of a big thinker, macro kind of guy, and you came to the realization that there was a place in people's portfolio for gold and silver.
Yeah, right now it's pretty much less than 1% of the allocation in the world of finance, and it's sort of ignored. But it has been, it's been the best performing asset class of this century. If you go back to the year 2000 when gold was $250, well, now it's $2,000. It's outperformed real estate. It's outperformed the stock market. It is cyclical, and we have been going for a decade now through a consolidation. A lot of people call it the 2011 to 2015 a bear market. I don't. I just call it a cyclical correction in a secular bull market. And I do believe that we will be seeing a crisis in 2024, and that the performance of precious metals is going to be spectacular. Probably cryptocurrencies as well. But cryptocurrencies are as yet unproven. Gold has a 5,000-year history of reliability.
Yeah, it's a great point. It's not necessarily one or the other. I know folks look at them for different reasons, but gold has been money forever. And if you look at the number of countries and the number of central banks that have their eye on gold, that's a little telling as well.
Yes, especially the Eastern central banks. The Western world is not accumulating at the rate that all of China, Russia, India, they are just accumulating so much gold. And I believe they are getting ready for something, and they want to put themselves on an equal, if not superior, footing. Now, the U.S. has the most gold of any country, but when you divide it by the population, we're not up near the top of the list by any means.
Now, growing up, Russ collected coins, as did I, and we read your book and started hanging around with you at some of the Learning Annex events and through our mutual friend Robert Kiyosaki, and we kind of got the gold bug, and today, looking in the rearview mirror, that was a good thing. But you've been working for the last few years on your latest book. Tell us about that.
Yes, it's called The Great Gold and Silver Rush of the 21st Century, because I do think there will be, I'm not talking about, going out with a gold pan. I'm talking about investing in gold before a crisis, because it is the safe haven asset. It's, it's a tier 1 asset for central banks. It is the only thing that you can invest in that's outside of the financial system and has no counterparty risk. You really can own gold, and real estate you can own, except you do have to pay your taxes, and if you don't, you're going to lose it.
That's right.
And so gold is this stupid lump of metal. I mean, gold is not my goal.
Right.
Gold is a protection, and there are these brief moments in history where it's the asset that has the single most potential gains in purchasing power. And we are in one of these cycles right now where there's so much instability in the world, so much anxiety, and all it takes is an event, a trigger, and gold has a resistance at 2070 right now, but it's built these very bullish patterns. So for anybody that's a technical trader out there, it's got a pan and handle that has developed since 2011, or a cup and handle, whichever you want to call it. It's sort of stretched out, looks more like a frying pan than a cup.
Yeah.
But that means it's been consolidating energy during a period of time where we have created massive amounts of currency. And gold is money. Everything else, like J.P. Morgan famously said, that gold is money, everything else is credit.
Yeah.
And the dollars that you have in your checking account, any dollars that are not paper dollars, are bank credit. They weren't created by the Federal Reserve. They were created by banks. And when it appears from nowhere and then it vanishes when debt is paid off or when bankruptcies are filed, currency vanishes. There's this brief period of time when the next crisis happens. I think you're going to see some real fireworks. I don't see gold stopping at 2,500 or 3,000. I think these are idiotic. People would call me insane back in 2002, 2003, when I was saying that gold could go to $1,000 an ounce.
Yeah.
And it was 250 back then.
Right.
And here we are at 2,000, and this is just a stopping point. I mean, it hit 2,000 back in 2011. So it's 2,070 now is the that's the peak.
Yeah.
But we also have this inverse head and shoulders pattern that has built, and the head and shoulders pattern is one of the most reliable patterns in all of technical analysis. And when it breaks that 270 level, I think we are going to see a slingshot move because of these multiple bullish patterns on top, because they become self-fulfilling. Traders see this and they jump on it. At the same time, the level of fear that we might have from whatever, I believe that the Silicon Valley, Signature, Silvergate, First Republic, and Credit Suisse banking crisis that happened in March and April. If you look at the global financial crisis, that happened in several legs. Something happened, and then there was a 5-month pause, and then another thing happened, and there was a 6-month pause, and that's when Countrywide when that went under. And then there was a 4-month pause and Bear Stearns, and then it was 2 months, and then 1 month, and then AIG, Fannie Mae, Freddie Mac, and this all happened like week after week after week. And so I think that we're going to see that you can't raise interest rates at the rate that they did and expect nothing to happen, because this was the greatest percent change year over year in history. There's never been rate increases anything close to what we've seen, and it isn't the how much they go up by percentage. It's the percent change from starting off at 0.1. I mean, the first rate changes should have been very small and very slow. So I think that you're going to see other crises happen, and I think they're going to unfold in 2024. And the inverse head and shoulders pattern will be complete. Gold will take a slingshot move. At the end of this bull market, silver will make much bigger gains than gold. Right now, I see a bigger opportunity.
Yeah, that's a really interesting point, because here gold is banging up against its all-time high, but silver is not.
Right. Name anything else in the world that is selling at a discount to its 1980 price.
Right.
I mean, in January 1980, it closed at $50, but the intraday high was $52.50 at the Chicago Mercantile Exchange in January 1980. So, and we hit 48 in 2011.
Okay.
And so, yes, and right now it's like $24 or something like that. I don't know what it is today, but it's right around that area. So it's less than half its all-time high from 1980. Gold and silver are money. They have no counterparty liability, so when crises happen, everybody rushes back to them for safety. And there's just so little in the world compared to the quantity of like U.S. treasuries, U.S. dollars, all of the other things that are considered safe haven assets are in enormous quantities. And gold is very, very limited, and places like Russia and China are getting ready for this.
Well, you said something earlier I want to come back to, and that is gold isn't the end goal. When we first met you, we're the real estate guys. We're next door to your booth, and you're holding court and talking about precious metals, and we're mesmerized by it. And then during kind of a slow period, you go, guys, it's not just all about gold. I want to be in a position where I can buy things like real estate, and you've done that. You have this incredible project you're working on in Puerto Rico. Do you want to talk about that?
Sure. Right now, the world is going through the 6th mass extinction event. It's called the Anthropocene extinction, and Anthropocene means human epoch. Right now, scientists, people were talking about this before the pandemic. It was starting to become news, something that people were learning about back in 2017 and 2018, 2019. And then when the pandemic happened, it's like we got sidetracked, and now we're involved in all of these wars all over the planet, and nobody is paying attention to the really big things. But scientists agree that the current rate of species going extinct is somewhere between 100 and 1,000 times the normal background extinction rate. And they believe that before the end of this century, that something will break. This could happen soon, and then it's like all over with. Once there's a point of no return, a tipping point, where everything starts to fall apart. So human existence depends upon slowing the Anthropocene extinction event until we can answer this problem with technological solutions and stop it. And we will. But we've got this 10-year period to go through. And so there's a method of farming called permaculture that builds the topsoil instead of depleting it. 50 to 70% of every plant grows underground, and it's breathing in carbon dioxide during its lifetime. Through photosynthesis, it splits off the oxygen atom and it exhales that and keeps the carbon and mixes that with the minerals from the dirt and the molecules in water, and creates all of the cell structure and the complex carbohydrates that we use for food and the animals that we eat use for food. So by definition, if you're building topsoil, you are sequestering atmospheric carbon dioxide. That's where oil comes from. And so if we can do this, my farm right now, we've got 100 solar panels and 9 Tesla Powerwalls, and that's just the beginning. I have electric tractors on order from a company called Monarch. I've got a couple of Tesla Cybertrucks, Polaris XUV that's electric. That they're already 2 years late delivering it. It's hard to make these new technologies at the beginning. So we're going to be doing completely green-powered farm. So it's silent, it's clean, and we're in Puerto Rico. There's all of these things that exist only on my farm that allow us to do this experiment where permaculture is a little bit more expensive than chemical monoculture, but not that much. And if we can bring the price down below chemical monoculture, and so it's developing techniques. And then the rest of the world adopts it, and this is the only thing that mankind does globally on a massive scale everywhere on the planet that can be turned from carbon positive. Right now, agriculture produces somewhere between 9 and 18% of all greenhouse gas emissions, and that can be turned carbon negative and sequester the carbon dioxide that other sectors of the economy are creating. We're up at the very top of Puerto Rico. It's the highest large farm in Puerto Rico. Our temperatures are between 8 and 15 degrees cooler than like down in San Juan or Ponce or the areas where most of the farmland is. There's tax exemptions for farmers in Puerto Rico. And then, because of this ancient discriminatory law called the Jones Act, which limits competition in shipping, there's only 2 shipping companies. They don't compete. Food is artificially 20 to 40% more expensive in Puerto Rico. But I am growing broccoli and asparagus and kale and mustard greens and all of these different things that you can't grow in Puerto Rico.
Right.
And I'm doing it because of my temperatures and stuff. So I am competing against farmers in Canada, USA, Mexico, and South America that all have to come through the Jones Act. That gives us an extra 20 to 40, like I've got 717 orange trees right now, and we will have probably 3,000 eventually. And a bottle of Uncle Matt's organic orange juice is $7.50 at Whole Foods in the United States. It's $11 in Puerto Rico.
Wow.
And so that extra profit margin can fund this experiment that can help save the world. And it's the only place that all of these different factors converge. And we've got the purest water and air available at these latitudes. Any pollutants come from North Africa, 6,000 miles away. That's where and so it gets precipitated out in its journey over the Atlantic. And then we're right up next to, we border Toro Negro State Park that has no trails or roads in it. So there's never been any grazing, farming. There's nobody in the 2,000 acres where my main river, I've got 3 rivers, 4 large ponds, and an 800-foot tall mountain in the middle of the property. And I can see from the top of that mountain both the north coast and the south coast of Puerto Rico from one spot. It's pretty spectacular. But the project is really to do something that will ultimately save humanity. So, yeah, it's sort of a side thing that I do to economics and monetary history. The economics and monetary history are the most important thing, and for people to start to understand how the economy works, and then what has happened in the past, so that you can see when they're doing the same stupid thing that they've done hundreds of times in the past, it's probably going to have the same outcome that it had in the past. So anyway, it's worth paying attention to. And my book, The Great Gold and Silver Rush of the 21st Century, is 75-80% economics, monetary history, where we are right now, understanding the economy. And it's only 25% gold and silver. But by putting that on the title, when gold and silver rise, what happens is I get this economic information into the hands of, they think they're buying a get-rich-quick book, and they're not. They're learning something that's going to last them the rest of their lives, regardless of whether we're in a real estate cycle, a stock market cycle, or a precious metals cycle.
We're talking with Michael Maloney today about more than just gold and silver, but up next, you'll have a chance to win his brand new book as we play real estate trivia. You're tuned to the Real Estate Guys radio program from the Bahamas. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
As I speak, inflation is robbing you at a rate north of 10%. Last year, the number one zip code that Mid-South homebuyers offered income property to Real Estate Guys listeners in appreciated by 21%. To harness that spread and protect and grow your wealth in the current economic storm, you need the 2 decades of experience in renovation and management that Mid-South Homebuyers brings to their investors. Every home Mid-South offers you will have brand new components, a new 30-year roof, and a high-quality renter, all in a price range under $150,000. Their empathetic property managers will use your ROI as their North Star, while the lack of repairs on their totally renovated properties contributes to their almost 4-year average renter stay and 99% occupancy rate. Learn about their lifetime occupancy guarantee and total 1-year maintenance guarantee by emailing midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. You'll be glad you did.
Having trouble finding deals where the numbers make sense? Invest in an asset class that delivers cash flow to you in good times and bad, and where most of that cash flow is tax-free. I'm Dave Zook. Many of you have heard me speak at Real Estate Guys events or heard me on their podcast. My team is a top 5 ATM operator in the country, and right now accredited investors can make cash flow returns well into the double digits and get huge tax deductions. For your free report on this lucrative asset class, email atm@realestateguysradio.com.
Hey everybody, it's Ken McElroy, and I'm on with the Real Estate Guys, and I'm very excited to be a guest and a speaker at the Investor Summit coming up. If you haven't signed up, be sure to do so.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Coming up the second weekend of the new year, it is Create Your Future, the 2024 Goals Retreat, a chance for you to get centered and serious about making a big dent in the world in the new year. Whether you've set goals before or this would be your first time, you get all the details at goalsretreat.com. That's goalsretreat.com. We're in Nassau, Bahamas, talking with the amazing Mike Maloney. Before we get back to that interview, it's time to play Real Estate Trivia, your chance to win Mike's new book by knowing today's real estate trivia question. And of course, has something to do with real estate and precious metal, if you can believe that. As soon as you hear the question and think you know the answer, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Give us your name, the answer to the question, and your physical mailing address, and we'll send you a copy of The Great Gold and Silver Rush of the 21st Century by our guest Mike Maloney. That can be yours if you've got the correct answer first. Last week on the show, we had attorney Mauricio Raul with us, and we asked this: which is the most regulated state in America? Well, according to the State Reg Data Definitive Edition, the most heavily regulated state in 2022 was California, with more than 400,000 regulations. Number 2, and some of you guessed this is number 1, New York, and number 3, New Jersey. Here's our real estate trivia question for this week. Which country is the largest producer of silver? Yeah, silver's found all over the world, but there is a country that consistently has the most production. Which one? If you know or just want to guess, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. We'll need your name, your best guess, and your physical mailing address. First person that gets it right gets Mike Maloney's new book, The Great Gold and Silver Rush of the 21st Century. That's today's real estate trivia question. We're talking with the author of that book, Mike Maloney. He's the founder of goldsilver.com and a prolific educator. Mike, you've always had a passion for educating investors. And before we're done, we'll let folks know how they can find where you're still doing that. But for listeners that are maybe new to even understanding how to invest in precious metals, reading your book, of course, would be an excellent start. What else might you suggest for folks?
Well, I never make recommendations. I tell people what I do.
Yeah.
And if you don't have any, dollar cost averaging is a great way to go. I do believe that there's a possibility. I showed some charts at the event that we are at. We're at a mastermind group called the Collective Inner Circle, and it's one of the best conferences. You're one of the founders of this conference. This is one of the best conferences I've ever been to. It's highly educational, and it is a group of very high power people, that high caliber. For somebody that doesn't have any, you just need to take a look at the performance of gold and silver, like especially in the 2008 crisis, the global financial crisis. Gold and silver, if you had some gold and silver in your portfolio, it protected you from everything else. The stock market crash, the real estate crash, you were safe. In fact, those are the periods of time, for me, I'm not worried about a crisis. That is when I do best financially. I have these floods of currency coming at me, and then the sort of dry periods are when precious metals are noodling sideways, and that is when people should be accumulating, because when there's a crisis, nobody can get any. It becomes unaffordium and unobtainium instead of gold and silver, and the spreads go way up. The amount that you have to pay over the international spot price, the spot price that you hear of gold or silver is the price of paper contracts. They're futures contracts. It's not gold and silver. It's a promise to deliver gold and silver someday. And so the international spot price, you might be paying 5, 10, 15, 20. In 2008, at the bottom, silver was like $8, and there were people paying $36 for silver eagles on eBay. 100-ounce bars were going for $18. So $10, more than 100% over the spot price. And so the time to accumulate is actually when nobody else really wants it. And you don't need to take a deep dive, but if you set something where you can just purchase every month the same dollar amount, if it goes down, like during the COVID crash, gold and silver went way down, and I bought a lot of silver. The gold-silver ratio, silver was 1/120th of gold's price. I captured some at 1/110th, and the natural ratio is somewhere around 12 or 15 to 1, and it was at that exchange rate basically for a couple thousand years. It's only been the past couple of centuries that things have been really out of whack, and in the meantime we've used up most of the silver. Gold stays around. We mine gold and we only use about 5% in industry. The rest stays above ground in jewelry, art, and investable gold. Silver, we use it up and throw it away. And so 60-70% of all the silver mined goes into modern life couldn't exist without it. It is in every electrical contact. It's in circuit boards. When you look at a mirror, you're looking at silver. DVDs, it's just everywhere. It's antibacterial. It is the best conductor. In fact, everything else, when it comes to conductivity, everything else is measured against silver. Silver's like 100, and then you've got things that are 97, and gold is down at 80. So it's indispensable, and as we go toward a more electric economy, electric cars use silver, solar panels use silver. So we use up more and more of it. There's a lot, the size of the market is very, very small compared to gold, so it doesn't take that much investment into it to move that market. And that's what happened back in 1980. August 15th, 1971, when we went off of gold. Gold was $35 an ounce, and it went to $850 in 8.5 years. So it went up 25 times its original price. The stock market went up about 1.5 times. The real estate went up about 2.8 times, I think it was. Gold 25 times, and silver 41 times. If you had sold a home in 1970, August 15th, 1970, and bought gold, by 1980 you could sell your gold and buy 9 homes that were identical to the one you sold. Silver, 17 homes. It kept ahead of inflation. It kept ahead of all other assets. In fact, until cryptocurrencies like Bitcoin, that was the greatest bull market in history. That was better than the tulip mania in Holland. It was better than John Law's Mississippi scheme. It was the largest bull market in history to that date.
And silver's undervalued today, so
yes,
consider that, right? I heard a statistic that the average American owns less than 1 ounce of a precious metal. Most people don't even have it.
Right.
So just a little bit in your portfolio, right?
Yeah, well, I measure my wealth in tons. And what I do is I let the gold-silver ratio dictate what I buy.
Okay.
And so it's in the back of my book. But when it's under 50, then I buy gold. When it's 50 to 70, I buy a mix. When it's over 80, I'm only buying silver. I will not I mean, when the pandemic happened and everybody was scared, the stock market crashed, and very often when the stock market crashes, people that have stocks, some of them will also be trading gold and silver futures contracts, and they have to get liquid, and they have margin call, and so they sell whatever they've got on their platform, and so they sell gold and silver, and you have these flash crashes, and that's when I picked up a whole bunch of silver during that flash crash, and so that could happen again. That's when you like double and triple down. There was a quote from some old movie, "Their fear will build my castles." Eat the meals they dare not taste.
Yeah.
And you have to be bold when everybody else is scared. And then when everybody else is bold, you gotta have some caution. Yeah. And so I don't make any recommendations, but I do think that it's probably prudent to be accumulating some right now. And then if you have a crash and the price goes down, if the stock markets crash, and take gold and silver with them down temporarily. In the global financial crisis of 2008, gold was $1,100 an ounce before the crash, and it pulled it all the way down to $800 from August to October. And then gold took off like a rocket going north, and the stock markets continued to crash until the following March.
Yeah.
And so the stock markets only pull it down for a short while. It's very temporary. But I doubled my position in silver during the 2008 financial crisis, and then I added an enormous amount during the COVID crash. One of the problems, though, is I'm somebody that usually is sort of overinvested and have very limited cash on hand. And it's actually, I paid for it recently. I made a huge investment in this book. And then on the third day of the book launch, Amazon changed the listing to a video game. It wasn't, and I'm going, no, this is a paperback book. And it took about 3 months, and they just absolutely crushed my sales. And I had put 4 years of my life and $250,000 cash outlay in this book. And so I didn't have any excess cash to make any purchases recently. So, but because I'm doing this farm, and there's big expenditures rehabilitating this farm. It was destroyed in Hurricane Maria. And it's interesting. It was established in 1865. I am the second owner.
Wow. Well, it's an amazing story. The book is called
The Great Gold and Silver Rush of the 21st Century, because it's going to be.
You're going to want to get a copy of this book, and you can get it for less than the price of an ounce of silver. It'll be worth it. If you're interested in how to get the book and what else Mike does, he's got lots of great education out there. Just send an email to goldrush@realestateguysradio.com. That's goldrush@realestateguysradio.com. Mike, it's been great to catch up with you. Thanks for sharing with us.
Okay, thank you.
There's Mike Maloney. More when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've ever dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2024 Goals Retreat, January 12th to 14th in Dallas, Texas. This unique weekend event has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at goalsretreat.com. Get your life back on track, physically, spiritually, and financially. Attend the 2024 Goals Retreat on the second weekend of the new year. Visit goalsretreat.com to learn more and get on the advanced notice list. This is no dress rehearsal. Live the life you were meant to. Visit goalsretreat.com or call 888-489-7723 extension 18. That's goalsretreat.com.
Hi, this is Garrett Sutton, Robert Kiyosaki's asset protection attorney and the author of Loopholes of Real Estate and Start Your Own Corporation. As an American or foreign-based investor in U.S. real estate, you know we are a litigious society. You know that you need to protect your real estate, paper, and bullion holdings with the right mix of LLCs and corporations. Our firm, Corporate Direct, not only forms these entities, but importantly, we properly maintain them too. If you fail to follow the corporate formalities, you can lose it all in an instant. Corporate Direct is your source for LLC protection and maintenance in all 50 states. Visit corporatedirect.com or call 800-600-1760. Mention the Real Estate Guys for a free bonus. That's 800-600-1760 or corporatedirect.com. We look forward to assisting you at corporatedirect.com.
Hey, this is Phil Collin from Def Leppard and Delta Deep. You're listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, if you ever thought about raising money to do bigger deals, or you want to passively invest alongside big real estate projects, well, come on out to the Secrets of Successful Syndication, our 2-day workshop on putting together bigger deals using other people's money. It happens in March in Dallas, Texas. You can find all the details on the website at realestateguysradio.com, where you see syndication seminar.
You know, speaking of syndication and just this conversation we had with Mike Maloney and gold being really a barometer of the health of the currency, we as real estate investors, of course, care about interest rates, but our friend George Gammon has been saying, even if interest rates are low, if the lending markets aren't working and they're not lending, it doesn't matter. And that's really where the opportunity for private capital comes in. We started the Secrets of Successful Syndication and really training syndicators because we saw after the 2008 financial crisis, the distribution system of getting money to market was broken, and there was an opportunity for private capital to step in and grab the opportunities which were abundant in the wake of the credit market collapse. Now, I'm not saying the credit markets are going to collapse again, but there's certainly stress because of this aggressive interest rate cycle we've been in. We've seen banks failing, banks shoring up their balance sheets. We've seen Bank of America, for example, even though these banks are having record earnings, they're also putting huge, hundreds of billions of dollars into their loss reserves. So there's real signs of stress in the credit market, and gold is telling us there's signs of stress because people are putting money into gold instead of into treasuries. And so all of those things can create opportunity. And the irony, like in all investing, is everybody wants to get in when everybody else gets in. But that's not where the opportunity is. The opportunity is to get in when everybody else is afraid or doesn't know how to get in. Warren Buffett famously said, be greedy when others are fearful and fearful when others are greedy. I think it's always a good time to be a syndicator. There's always going to be deals and there's always going to be private capital. But the really great opportunity to become a syndicator and raise private capital is when there's distress in the financial markets and lending is tough. And I think we're moving into that type of an environment. So now's the time. If you've been thinking about it, now's the time. March will be here before you know it. Send an email to syndication at realestateguysradio.com. We'll get you the information about the conference. It's going to be fantastic, and we have some new speakers too.
Absolutely. And you know what? It is super early bird right now. So if you're listening to this podcast as it's published, you have a chance to get in at the best price. Well, I tell you what, it was great to see Mike Maloney, spend some time with him this weekend in the Bahamas. And what a multitude of ideas and knowledge and experience swimming around his brain.
Well, I remember going way back to the Learning Annex days when we were out there on the road with a lot of people, chasing Kiyosaki and company around and being very much into the red hot real estate space. And seeing Mike Maloney there in a booth with his projector and a crowd of people all around him doing his charts and his graphs. And boy, how far he's come leading with education, which of course is near and dear to our heart. He did mention something, I think, that he just said in passing, I think a lot of people don't understand because it really doesn't, you don't really think of it that much in real estate, but it does kind of apply, and that's dollar cost averaging.
Yeah.
Dollar cost averaging is a basic concept, and if you're familiar with it, then just indulge us for a moment for those of the listeners who aren't familiar with it. But the concept of dollar cost averaging is that you just invest on a schedule. Every month you put a certain amount in, and if the price is high, you don't buy as much. And if the price is low, then you buy more. And when you put all that in a blender and hit puree, your average overall price is typically lower. And if you're investing with the trend will end up being your friend. So as long as you don't think whatever you're investing in is terminal, meaning it's just going to completely go down to zero. So for example, if you're dollar cost averaging into your savings account,
You're always putting $1,000 a month in your savings account. And the plan is someday I'm going to have this big pile of money. And then every day inflation is deteriorating it by 3%, 5%, 6%, 10%, whatever the number is. That doesn't work in your behalf. That dollar cost averaging doesn't work. The flip side of that is to dollar cost it into something real, like real estate that benefits from appreciation, like gold, which benefits from inflation. And so then when you get these temporary dips where your dollar is strong, you're going to buy more. Sometimes you're going to have your dollar being weak, you're going to buy less. But if the overall trend is that the asset is going up in value in dollar terms versus the flip side of it, meaning the dollar is getting weak, you want to be divesting yourself consistently of dollars and investing yourself consistently in things that are real, that hold its value in the face of inflation.
It's also kind of a slow and steady way to just put some metals in your portfolio. It's not totally set it and forget it, but at least it gets you that discipline. You can do the same with things like cryptocurrency or even particular stocks that you like. You know, speaking of currency, Mike is quick to point out when most people use the word money that they really mean currency because, as you say, Russ, words mean things.
They really do. In fact, I talked about this at the New Orleans Investment Conference and mentioned it again in Bahamas, and that is the difference between capital, money, and currency. And a lot of people don't know because they think of them as all as being one thing. They say, oh, I'm raising capital, but they're really raising currency. And they think of money as dollars or green pieces of paper, which are really claims, used to be claims on wealth. Now they're considered wealth. Mike Maloney's argument is, no, money is gold and nothing else. That's what J.P. Morgan famously said when he testified in front of Congress. Money is gold and everything else is credit. But what's capital? Capital is real production. When you have capital, you've produced something. And that capital then is represented, the value of the capital is stored in money, which has to hold its value over the long period of time. So you can trade capital for capital. Maybe I build a home and I trade it for a car. And you use the money to hold the value from the time you built the home until you buy the car. It becomes currency when it becomes the medium of exchange. Anything can become a currency. That's what bartering is. But not every currency can become money. And Mike's argument is, hey, if you think those green pieces of paper, those digits in your bank account are money, you think they're storing value for the long haul, they are not. So capital is one thing, money is something else, and currency is something else. And I think investors would be wise to learn to discern the differences between those three things.
You know, it's been awesome hanging out with Mike as well as Brent Johnson and George Gammon and Jason Hartman and all the folks that are part of the collective inner circle. If that sounds like a group you want to hang around, these are pretty high-level events. It's not inexpensive to join, but we are super excited moving forward into the new year as the Collective Inner Circle has big plans. If you want to learn more about that, and if you're looking for a mastermind group that can help you sharpen your saw, just send an email to collective@realestateguysradio.com, collective@realestateguysradio.com, and we'll get you the details. Hey, before we get out of here, quick reminder that we have cabins open on the 22nd Annual Investors Summit at Sea. We're getting back on a beautiful cruise ship, and we've got all kinds of folks joining us. Recently announced, Peter Schiff will be back with us, as well as Brian London from the New Orleans Investment Conference, our great longtime friend and fabulous sales trainer, Tommy Hopkins, coming back with us after a 3-year hiatus. Ken McElroy joining us, as well as George Gammon, and lots more. You want to book your cabin early so you can have the best choice of accommodations. You can find out all the details if you just send an email to summit@realestateguysradio.com. I know I'm looking forward to getting back on the ship.
Well, I think that this is a great opportunity because of when this particular episode is being released. It's a fantastic Christmas present.
Yeah.
It's also a fantastic graduation gift. And so if you've got a young person in your life and you want to give them something meaningful, both for Christmas and a graduation gift, you could put the two together because you give them the gift in Christmas time or during the holidays, and then we actually sail in June. And the opportunity to be on a ship with big picture thinkers who have created a lot of wealth, a lot of different entrepreneurs and investors. And we're going to be talking about understanding the world that these young people are graduating into and inheriting and having to go make their way in. It isn't the same world it was when I was a young man, by far. And my world was very different than the world that my father was in when he came in. And if I could go back in time, I would say the one thing that I didn't do enough of was investing the time and money to get around people that had really climbed the ladder of success and done well. I'm very proud of the fact that we put a lot of effort on the young people in the program. We don't have a lot of spots. There's 30 spots, and I don't know, Robert, you know how many have been taken.
21 are already spoken for. 21 spots for our Young Investor program are taken, which means we have 9 spots for folks 18 to 25. If you have someone in your life of that age, then it's not run to the back of the room today and today only, but there's only so many cabins.
Well, it's life-changing for these kids, too, because they get around each other. They end up doing deals, getting into business together. Of course, we don't put people together. We don't vet anybody. You got to make sure that if you meet somebody anywhere, you do your homework on them. And the other thing this thing is great for is if you have a partner, a spouse, a parents, even a advisor that you think doesn't quite see things the way you are, and you're excited about real assets, real estate investing, and what's going on in the world. You're concerned about it. You're trying to figure out where the opportunities are, and they're not quite into it. This is a way to take a high-level education and marry it to a really high entertainment, really fun environment. Get around a great bunch of people and have a lot of casual conversations and additional formal classroom training. So it just rocks on many, many levels. If you're looking for something really extraordinary to bless somebody with this holiday season, consider getting them involved in the summit. And if it's a young person, then give them both a holiday gift and a graduation gift at the same time.
Hey, big thanks to Mike Maloney for taking time out of his busy schedule to visit with us. If you'd like information on how you can get more education from Mike, as well as his new book, just send an email to goldrush@realestateguysradio.com, goldrush@realestateguysradio.com. We've got an awesome show lined up for next week. Until then, go out and make some equity happen.
This episode of the Real Estate Guys Radio Show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers, low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct, asset protection strategies for real estate investors from attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.